But let's try and get some more perspective on this. Ruchit Jain, technical analyst at Angel Broking, is joining us, and Amit Trivedi, founder for InvestWorks, to take us through some of the FNOQs, also joining in a few minutes from now. But Ruchit, let's start off with you first. In terms of the way the levels are panning out, and more so in terms of how the sliders really become, are we somewhere near the bottom, or do you foresee 72, 70, 100 that's possible on the screen?
Good morning, Priyank.
Morning.
Well, probably Nifty, although has been trading, forming this low top, low bottom. But if you just recollect a couple of months back, we were talking about the channel in which Nifty is formed since the highs of 9119, and markets were at the higher end of the channel. Now, after this recent correction, markets now are going towards the lower end of the channel, and the downside of this channel is seen around 7350 to 7400 range. So being very close to the lower end of the channel, we are not advising our clients to create short positions now. I think the volatility, kind of volatility we had seen yesterday, it's usually seen in the last leg of the corrective action. Now price wise, we have already corrected from the highs of 9119, and as I told that we are near the lower end of the channel. Time wise correction, if we observe, then in last 7 or 8 years, if you see, whenever markets have corrected, usually 10 to 11 months is the maximum time when the markets have corrected, the correction has been seen. Even in 2008 bear market, the markets corrected 64%, and it took about 10 months for that correction. It bottomed in the 10th month. In 2012, again when the market corrected, although price wise it did correct, it corrected about 15%, but it took about 11 months to correct that. So probably barring 2000 bear market which was there, which took about 19 months for correction, we have not seen any other correction which has lasted for more than 11 months. So probably 10 to 11 months correction usually last, and which we are seeing, we are already in the 10th month of correction. So time wise we are already at the bottom, and probably in January or February we should bottom out, this market should bottom out, and again a new uptrend should start away. Price wise we are already at the lower end of the range. Definitely volatility would be there, since this is the last leg of the correction is there. So in this volatility, it's not a time for traders to get in now, because volatility on the both sides would be there, and that it would be very difficult for the traders to make profit here. But definitely those who are long-term investors and are thinking from 6 months or 12 months point of view, this is a good time for them to get into the markets now.
So is there a certain Nifty strategy right now, Ruchit?
Priyank, we are not, the only strategy in Nifty that we are recommending now is not to go short. We are not recommending to go long at current levels, because we would wait for some sort of reversal panning out on the charts, which so far we have not seen. Around 73, 70 or 400, we believe that markets would take a support and rebound from those levels. But for taking a position now, what traders are expecting, that where is the bottom? Everyone wants to know where is the bottom, where the bottom is at 7200, 7400. Our take is that rather than rather than catching exit where the bottom is buying over there, wait for some reversals to happen, let the 100, 150 points move away from the bottom, then look to buy the markets. So don't go for bottom fishing, let the charts or let some buying coming and let the chart show some reversal pattern, then only one should go long. But definitely at current levels, after today's gap down opening, one should not create any short positions in index. Yes, stock specific volatilities would be there, stock specific opportunities would be there for next 3-4 trading sessions, but not in index.
Okay. Amit, let's get your perspective as well. What are the kind of levels you're watching out for?
Hi, good morning. So actually there are 2-3 things that I am watching for. One is how gold is behaving. Second is how yen is behaving. Because if this is like a very classical risk-off kind of a trade, then both gold and yen should appreciate substantially against other pieces. I am not seeing that convincingly happening. So my broad expectation is this is more like a correction than a downtrend kind of a thing. Now, the other thing that I'm seeing is that because, as like the other guest was also pointing out, the volatility is quite high. So it may happen that some of the trades that you might do, you may have to roll over those trades in the next month. So that's what I think where you will be. Broadly around 7,400 to 7,600 may be the range for Nifty.
All right. So that's the kind of range that you're looking at. So, what's the strategy at this point, Amit? Given the kind of volatility we're seeing, what would you advise?
See, basically, if you look at it, because markets have become volatile and down moves are more sharper than the up moves, so doing anything in puts may be profitable because the IVs are high, but it would be quite a risky thing per se. So a trade one can do is also because of the correction that has happened, ability of market to go up substantially is very low right now. So what one can do is you can buy like a 7500 call and sell 76, 7700 calls. You are approximately investing 5 to 7 rupees in this trade, and you will make profit if Nifty remains any value between 7500 and 7800. The losses will start above 7800.
Okay, so that's as far as the Nifty strategy is concerned. But the other thing that we've been hearing from some of the market participants recently has also been the advice that use some of these pullbacks to actually probably book out. Do you agree with that kind of a view right now? At least this is probably more pertaining to the broader markets, which have been butchered recently. So what are your thoughts? Should some pullbacks, if we were to see probably today or tomorrow for that matter, should they be used as opportunities to some exit and lighten up a little bit?
Basically depends. If you are a pure investor, then I think the fundamental thing that is happening is earnings are not increasing. Okay. And while a lot of the analysts are projecting FY17 to be a 500 kind of a number and all that, I am not in that camp. I think you will be at best getting like a 5 to 8, 9, 10% kind of a EPS growth. So if you are comfortable with a 8 to 10% returns on the index, then I think you can continue holding on to your positions. If you are a trader, then maybe selling calls would be a better strategy than rather than selling futures or something. Because again, like there could be a pre-budget rally which might come in the month of end of Jan, early Feb kind of thing.
Ruchit, when we are anticipating such weakness, then are there any specific stocks that you're looking at? Would you just advise sitting on the sidelines? Are you, what are you advising at this point?
Yeah, as I told, there is no opportunity in index now due to volatility, but definitely stock-specific moves are very sharp, and I think that we could get some good opportunities in stock-specific action. We are recommending to go short in Divi's Lab. We have seen that pharma sector in yesterday's trading session, especially the mid-cap pharmas, had shown good correction from the highs. Probably Divi's Lab is one of the stock which has not corrected significantly, and now the prices are showing breakdown from a triangular pattern. So probably I think it should be continuation of this downfall along with other mid-cap pharma names. Keeping a stop loss above 1120, we are expecting a target of 1020 in about 3 to 4 trading sessions itself. Second, we are also recommending to go short in ACC. Long-term trend line of 1300 has been breached in the stocks in last 3-4 trading sessions. The prices are trading below that support end only. So I think some sort of selling pressure, as in Nifty forms this panic selling, some sort of selling pressure could come in ACC also, and some sharp fall could come. So even this is a very short-term trade. So I'm not giving any short trades for about medium-term 15 days, 20 days or 1 month point frame. But just from 3 to 4 days of trading perspective, both these short calls are there. So one can go short in ACC with stop loss placed above 1310 and target of 1230 in next 3 to 4 trading sessions.
Okay, so some of the stocks out there that one probably can look at in this market. But I want to just once again get some perspective going on the big support for the market in the last couple of days, which has been Reliance Industries. Amit, are you surprised by the way the strength is really emanating from this counter and the way it's somewhere trying to cushion the index to a certain extent?
Yeah, of course. So if you broadly look at Reliance per se, and the support from BIS, that is what is lending support to the markets. I'm reasonably surprised with the way Reliance is behaving, like a 8-10% move in such a short period of time. But yeah, that's good. I think a similar thing could be expected from Infosys today. Let's see.
Right. Talking about those IT names, Ruchit, let's get a check on both a TCS and an Infosys from you as well.
Well, last I think 4-5 trading sessions, clearly Infosys had outperformed the other IT names, and on the chart structure there is no weakness seen in Infosys. So probably I think the trend is positive in Infosys. High top high bottom formation is still there, although the last few days have been consolidating, but I think positive view would be maintained in this. On the high side, minor resistance would come around 1110. So if in today's trading session post the results, if it takes out this, then it's quite possible the near term highs which were there around 1170, 1180 could be seen in very short term. On the other hand, TCS has been showing weakness and has breached its trendline support. So probably I think this trend of long in Infosys and short in TCS would continue for some more time now.
Alright, so that's as far as the IT pack is concerned, what we're tracking. Remember, Infi numbers clearly just counting down to that one as well. We'll be probably, remember, just a quick reminder, you actually have a 10 a.m. press conference as well as far as Infosys is concerned. So that's going to be something that we'll closely watch out for today as far as what the management actually has to say. And remember, you've got a couple of the companies actually just warned before he went into this quarter in terms of the way the Chennai floods could impact their revenues as well. So that's going to be important to see this time around as well as to how the performance really plays out. And even though that was just more of a event-based hit that could have actually taken place, what more is the outlook coming from the international business will be where the focus will be as far as Infi is concerned, and also any update on guidance will be closely watched. So some of the numbers that one needs to keep an eye out for. Yesterday though, on closing basis, stock closed higher by nearly 3% going into the earnings today is what we saw. So let's see how this one plays out as far as earnings are concerned and what we track there. But in the other space that's been also in focus has been the engineering pack. L&T, BHEL and some of the other mid caps from this space have been struggling quite a bit. Amit, what are your thoughts on L&T specifically?
Yeah, I think it has corrected quite a bit. If you look at the way options is planning in this, 1150 was like the major support for the stock, and it is somewhere over there only right now. So broadly, I think the expiry should be somewhere over here, 1140, 1150 kind of level, or slightly higher. But right now, they all seem to be slightly in the oversold zone per se. So I think they should remain between 1130 to 1150, 70 kind of a broad range.
All right, that's the call coming in on L&T as well this morning. We've got Tata Steel in focus. Amit, a bit of a downgrade coming in. We've also had some commentary from the management saying that the sharp fall in steel prices have triggered that rating review. Let's get a check on Tata Steel from you.
Yeah, I think Tata Steel, basically, if you again look at it, I think it should remain about 240 kind of levels, or between 230 to 240 kind of levels. I was reading one more report which said that although commodity prices are down, but so is oil price down, so they are getting some benefit over there also. So, but my broad expectation is it should remain about 230 per se. So one trade you can do is buy a 230 put option and sell 220 put options. You are investing approximately, you are getting around 10-20% this trade. And if Tata Steel does go to around 230, the spread will kind of open up as there are only 10 working days in this expiry, in this series. So I think at around 1-2 rupees spread, one can unwind this trade.
Okay. Ruchit, had a look at Tata Steel?
Yeah, I don't think that Tata Steel would fall significantly from current levels. Since September itself, we have seen that although the commodity prices are going down, now this Tata Steel has started forming this high top, high bottom. Although not a sign of a very big uptrend over here, but definitely I think downside seems to be limited. And no, after such downgrades, if any sort of sharp falls come in the stock, then I think one should look to accumulate the stock from a bit longer term perspective.
All right. Okay, so that's Tata Steel for you as well today. Also, of course, plenty of other stocks that we continue to keep in mind from the mid-cap pack, given the kind of hammering that we saw yesterday. Amit, just want to check with you once if there's anything you're tracking there, anything anything that you're looking at in terms of stock-specific action?
No, I'm not following mid-caps at this point of time.
All right, so at this point, stay away from that pocket from mid-caps yesterday. So a complete hammering as well in trade, despite some amount of a rebound on the index. Let's take a very quick break. We'll come back and continue that conversation as well in just a moment.
Welcome back to watching Street Smart. This is Dealing Room on Bloomberg TV. Now the SGX Nifty still indicating a certain gap down. 95 points lower is what we're seeing as far as the SGX Nifty is concerned in terms of the way it's panning out right now, indicating markets will most likely could start off on an extremely weak footing here is what we're tracking so far. In terms of the way the Asia screen is panning out, still reeling under pressure and haven't seen any major recovery. Marginal bit of improvement coming in as far as the Shanghai Composite is concerned. Hang Seng also still down 1.5% is what we're seeing, and the Japanese markets in the break are down nearly a whopping 4%. Alright, let's get back to our conversation with Ruchit Jain, technical analyst at Angel Broking, and Amit Trivedi, founder at InvestWorks. Gentlemen, we were talking about a couple of the stocks that have been in focus. Let's continue with some of the auto names as well. Tata Motors and Maruti out here, Amit. What's your reading on these two?
Yeah, broadly, I think Tata Motors is showing good amount of bouncing back ability.
Okay.
So if market go down, like for example today if it goes down, somewhere close to around 350, 253 kind of levels, one can trade probably futures of Tata Motors from a very intraday kind of a perspective.
Okay. And Maruti, Amit?
Maruti I think has kind of given its way. I don't think it will cross 4500 per se, where it used to be. So a trade one can do is, you can buy a 4300 call option of Maruti. It's at around $80 right now. And you can sell two 4400 calls per se. You are getting, it's 0 rupees invested. And if there is a marginal up move in Maruti, you make money. Your maximum profit will be at 4400 and losses will start above 4500.
Okay. Ruchit, Tata Motors and Maruti technically as well, what are your thoughts on these two?
Technically, Tata Motors looks quite better in this space. In fact, I would go with the Tata Motors DVR over here if any buying position has to be created in this space. If you observe, then this stock has started forming this higher top, higher bottom formation, and also the recent up move which came from 200 to 310. It has hardly retraced any of this up move. It retraced about 38.2 to 50% of that up move, and again has started going up. So I believe that going ahead, Tata Motors DVR could outperform in this sector. The support for the stock is around 253 to 250. So any correction in this volatility again up to 253 to 250, one should use that as a buying opportunity. One will keep a stop loss below 239 on all the long positions. Once this volatility sets in, I think this uptrend would get continued in this Tata Motors and Tata Motors DVR, wherein DVR could outperform. So I would suggest buying on dips in Tata Motors DVR. Maruti, we were already short in this stock once it had given breakdown from the rising trend line. I think the stock would still remain under pressure in near term. One should not be in a hurry to do any kind of bottom fishing over here. Major support for the stock would come around 4,000. So probably if the stock could correct up to 4,000 if the down move in the market or in this auto sector continues. So one should not go for any kind of bottom fishing in Maruti. Stay out of that as of now, and look to buy Tata Motors DVR on dips.
Okay. Ruchit, do you have a call on the mid-cap index? I just want to get a sense of it because, weakness really starting to set in there as we saw yesterday. Just give us a sense of, whether or not you're anticipating further weakness building up on that front.
However, near term, I think mid-cap index would show more weakness than the large-cap names. We have already seen that the large-cap names have corrected significantly from in last 9-10 months, but mid-cap names have have shown good outperformance to them. Now, what is happening in this last leg of corrective action? The large-cap stocks have become are trading near their respective support zones. We are seeing a good outperformance in Reliance Industries. The banking names which are going down, ICICI Bank, Axis Bank, even they are trading now to close to the long-term support zone. For them, even SBI is trading at the lower end of the channel. So downside would be very limited in this large-cap names. So obviously, we are not expecting major fall in the large-cap names, but mid-cap names have started showing a very good weakness in last to couple of trading sessions. So what would happen when the volatility increase in the last leg of a correction and some sort of panic selling comes with the mid-cap names, where we can see more of a panic selling comes in rather than large-cap names. So if anyone is a trader from next 1 week perspective, I think this mid-cap index could show some sharp corrections. Even the mid-cap stock names could show good sharp corrections. So probably traders should clearly stay out of this mid-cap names as of now, and definitely large-cap names looks good attractive bet over here.
Okay, so that's as far as the technicals are concerned and what we're tracking in regard to the benchmark as well as the mid-cap space. But gentlemen, just hold that thought. Let me just count it down to the pre-open as well here. And the SGX Nifty, as we build up to the pre-open, is still still indicating quite a bit of a gap down by 99 points.
All right, let's now take a look at how the pre-open is shaping up. Okay, a huge gap down expected, as Priyank also just mentioned. Those quotes now starting to come in on your screens, as you can see there. Still looks like it is definitely going to be a weak start, perhaps not as severe as was indicated on the SGX, but still below 7,500. 7488 is so far what we're watching out for. And just a few levels to track as well. Nifty 20% from its live highs would be at about 72.95. So that's kind of a lower level that we're watching out for. So still at about 74.97 is what we're looking at right now, and that would actually signal a bear market. We had Ruchit also a little earlier just outlined some of the levels on the downside that he was watching out for. Sensex is actually recovering pretty fast, just down about 20 odd points right now. But the Nifty below that 7,500 mark. Remember, it's been testing 7,500 pretty much through the week, but has managed to close above that pretty much on all occasions so far. Currency this morning, we've got minor downtick, around 67 is where it's trading. Anindya Banerjee joining us for a quick check on that. Anindya?
Yeah, hi, a very good morning to everybody.
Yes, Anindya, just take us through how you're viewing the currency at the moment. Further pressure expected?
Yes, that pressure is going to be there on the rupee for the primarily because it's a Asian sell-off which we are seeing. Dollar is getting bought against as a safe haven play against all the risky currencies. The reason rupee has done exceedingly well in spite of this over the last so many weeks is because the central bank has been relentlessly selling dollars either through the exchange traded market or even through the interbank market, and that has capped sort of around the levels of 6.7 or 6.710. So as long as that kind of a selling pressure continues, rupee might continue to oscillate around just meander around 66.80 or 67 levels. But if the escalation in the risk of sentiments globally continues, then it might try to squeeze through 6.710, in which case 6.7.5, 6.760 will be exposed.
All right, Anindya, thanks for a quick check on the currency there. So still looking a little jittery when it comes to both equities and the currency so far, but around 67 is what we're looking at on the rupee, and in terms of equities, still lower, still below 7,500, but definitely a little better than what we were anticipating from the SGX. We've got Amit and Ruchit still with us as well. Ruchit, just to recap the numbers or the levels that you're watching out for on the downside today.
For today's intraday session, 73.80 to 7400 would be the first support zone from where markets could show about 40 to 50 points bounce back. If 73.80 is breached, then probably the long-term support zone, which is the lower end of the falling channel, would come around 73.50, 73.60 levels. So those could be tested then. But definitely, I think I would still emphasize that we are in the last leg of the selling, which has been shown. Volatility would be there, but definitely don't create short positions in the index over here. On the high side, intraday resistance would be faced around 7520.
Okay. Amit, let me just get those levels from you as well once again, because 7,500 we've been really toying with that pretty much all week. I mean, what does that signal to you if we do manage to break that? I mean, even though right now we seem to be just about sustaining it.
Basically, opening intraday and where market closes is very difficult to predict in these days right now. So I'm looking at currencies. Aussie dollar, I'm looking at yen. If Aussie dollar goes back above 0.7, that's risk on globally. If yen remains around 118, that is what I'm looking at. From our perspective, I think broadly, I think market should remain between 74 and 76. But as I said, because markets can sway in one direction, even if you have put some trades like selling a 7,300, 7,400 put and there is some market over there, then I would suggest you kind of roll over your position, because as Ruchit was mentioning, I think we should consolidate at these levels.
Okay, so that's as far as the cues are concerned in terms of how the market action could really play out. But Infy in the pre-open today, as we're just counting down to numbers, is seeing a little bit of it's actually trading extremely flat here. 0.2% higher is what we're seeing as far as Infy is concerned, as we're just waiting the numbers for the quarter for Infosys. But Ruchit, in terms of some of the other counters from the pharma pack, what are you focusing on? We've seen what happened with Marksons yesterday, but beyond that, are there any stocks with a large cap healthcare pack that you would be looking at?
Then if we just see the last 6-7 months, then large cap names have shown good correction, whereas mid cap have shown good outperformance. Now yesterday, after this Marksons Pharma news was out, we had seen that for the entire day all the mid cap names were correcting. So in near term, I think the mid cap names would correct, but large cap names have now become attractive because they are trading at the good long term support zones. Take it Dr. Reddy, Dr. Reddy, Sun Pharma, and Cipla. These are the three stocks which I think the downside should be very limited, whereas the other mid-cap names such as what we spoke about, Lupin and all those mid-cap stocks, they could correct now going ahead.
Yes, just seem to have lost the connection there with Ruchit, but I guess we've got the connection going again. Ruchit, sorry, we lost you for a few seconds there in between. Could you just take us through once again your views as far as some of the large cap pharma players are concerned?
Yeah, so I was saying that large cap pharma names have already shown good correction and are now trading around the long term supports, whereas mid cap names are showing signs of breakdown. So next few trading sessions, maybe next 3-4 trading sessions, if pharma names remain under pressure, look to buy large cap names and avoid mid cap names in these names. Dr. Reddy, Cipla and Sun Pharma would be the top bets where one can look to buy from 3 to 6 months of horizon at least.
Okay, that's the mid-cap pharma pack for you. Amit, what's your view, given that you're tracking the currency situation so closely as well on some of the exporters? What kind of strategy would you advise on that front? All right, we seem to have lost the line with Amit there as well. We'll just go back across to him in a moment. We've got a few more names now, just from the just to see in terms of the pre-open. A little bit of pressure on select names. Cadila, Idea, BHEL, some of these names, for example. Ruchit, we've been tracking a BHEL and L&T as well. L&T in particular, given some of the recent brokerage reports on the counter. But let me just get your check on some of these heavyweights and whether or not you see any buying opportunity there at this level.
Well, not yet, Abba, because we have seen this low top, low bottom formation still continues in this stock, and so far there are no signs of reversal. As you know, until we see any signs of reversal, because both these names have corrected significantly, and they have been leaders in the market correction since last few months. So unless we see any kind of reversal forming in these stocks, I would not suggest to buy in these stocks. Definitely BHL has now coming to near its support zone of 130-135 range, and even Larsen & Toubro, the downside could be limited from current levels. So what strategy could be applied over here is those who are already holding short positions in this stock, they can look to cover the shorts over here. But going long, unless any signs of reversal is seen, it's not advisable to go long even at current levels. Support for Larsen & Toubro is coming around 1100 to 1130 range. So any short positions should be closed out in this range.
Okay, so that's as far as some of these stocks are concerned that we're watching out for. But let me just quickly, once again, just mention some of the big movers. Tata Steel on the back of that downgrade from S&P is down 4.7 the pre-open. Axis Bank, which has been hovering around crucial technicals, crucial levels rather, is down 2.93% as well. Vedanta, Tata Motors, Hindalco, ICICI Bank and PNB all seeing some major weakness here in the pre-open at least. HCL Tech, SBI, Infi again down 1.5%. TCS though is flat. Wipro, DRL, HUL and Bosch, some of the defenses getting a little active here in the pre-open is what we're seeing. But Ruchit, Axis Bank and SBI, what are levels here on these banking majors?
Axis Bank now is trading very close to its long-term support zone. If you observe the entire last up move from August 2013, where it started rallying from 150 and went up to 160, it is now trading very close to its 50% retracement of that entire up move, which is coming around 395-400 support range. So I think downside would be very limited in this stock. In this 395-400, I think one should look to accumulate this stock now. A bit longer term perspective of 3 months or 6 months, I think this stock provides a good opportunity for portfolio investors. Apart from that, SBI, although nothing reversal has been seen, but again the downside could be very limited in this stock too. 190 is a good support level for this stock, so I think the stock has limited downside from here in SBI also.
Okay, let's take a look at what we're expecting from Infi today. We're just watching out for those numbers. It should be out any minute. A slow quarter expected from this one as well. But remember, the stock was actually moving higher ahead of earnings yesterday. Today down about a little over 1%. Shell has that preview with him.
Aside, tepid quarter is what's expected from Infosys for the third quarter. 2 or 3 major reasons for that, but I'll run into the reasons slightly later. Let's start off by taking a look at the headline numbers. Company's revenues are seen up just by 0.1%. Revenues in rupee terms are seen up by 0.35%, and profits on the other hand are expected to decline by 1%. Margins, again, a slight bit of decline is what is being expected. A few reasons as to why such a tepid quarter. The first one being that generally the third quarter is soft on the back of furloughs and holidays, so that seasonality has played out in TCS as well and is expected to play out in Infosys. Second major reason is the Chennai floods, and most analysts are factoring in an impact of anywhere between 25 to 30 basis points on the back of the Chennai floods. Another one important thing is that we generally do a quarter-on-quarter comparison for IT companies, and for Infosys in the last quarter they had a revenue which was a one-off item which came in to the tune of $23 million, which will not be a part of the earnings this time around. So that is also one of the reasons as to why such a tepid quarter is being expected. What are the few things to watch out for? Clearly the first major thing to watch out for will be the FY16 revenue guidance that the company had given in constant currency terms. What the management says about that, any kind of move to that number will be quite importantly watched by analysts. Commentary on the fourth quarter and business environment, and the management's initiatives to control attrition. These are a few things to watch out for when you're analyzing the numbers for Infosys.
Alright, Shah, thanks for getting us those updates. And Infi, clearly the big number that we're watching out for. Stock though ahead of those numbers is down 1.3, 1.4% is what we're seeing currently. Ruchit, as we just count down to live trading, I just want to once again reiterate those levels for our viewers in terms of what you were telling us earlier as far as Nifty is concerned. What are some of the critical support areas that one needs to watch out for, and at what point does one get convinced that this, if there's a relief rally or a rebound, should one then go long? So the two levels, one on the support side and one above which you would recommend long positions.
So the major support in the market for short-term traders 7400 range, which we have seen a falling channel formation, and the lower end of the channel comes to that range. And on the high side, 7600, 7620 is a major resistance now. If that is taken out, then we can see a good up move in the markets again. So probably if anyone is looking to create long positions in the index, then it would be above 7620 levels. And now in this range, since we are at the lower end of the range, so any decline what we are seeing what is indicated by pre-market opening today should be used as an opportunity just to close out the existing short positions.
All right. There you have it. So those are the levels we're tracking. Just about a minute to go for opening. It's looking like a weak picture. So recap for you, we've seen a global rout once again overnight and in Asia this morning. Again on the back of concerns with regards to that falling price of crude. NYMEX cracking, in fact, the 30 mark. So it's looking fairly worrying when it comes to global screens. Our market's taking cues from that as well. So it's really about the global headlines this morning, Priyank, that are feeding in terms of sentiment. And the domestic picture as well. I mean, as we've been hearing from some of our experts in terms of technicals, some amount of pressure expected to continue. But around 74 is really where they're expecting things to stabilize for now. Not saying that's the end of it yet.
Yeah, that's right. In fact, if you look at the